Why does the CRA enforce stricter reporting rules for non-resident landlords? If you're a non-resident earning rental income from Canadian property, you've likely noticed that the Canada Revenue Agency, CRA, holds you to a stricter standard than Canadian residents. From mandatory withholding to additional forms and tighter deadlines, non-resident landlords face more hoops to jump through. So why all the extra scrutiny? The answer comes down to control, compliance, and collection. And understanding the CRA's reasoning helps you avoid penalties while staying fully compliant. Non-residents are harder to track. When a landlord lives in Canada, the CRA has easy access to their personal info, their financial institutions, their employment and income data, their tax filings. But when someone lives abroad, enforcement becomes more complicated. The CRA can't easily send audit requests across borders, collect unpaid taxes, or enforce judgments internationally, especially if the landlord has no assets in Canada. That's why the CRA creates front-end safeguards to ensure non-residents are compliant from day one. Withholding tax is a guarantee. The CRA requires that 25% of gross rent be withheld at the source by the tenant or property manager before funds even reach the non-resident. This ensures Canada gets paid regardless of whether a return is ever filed. Unlike residents who self-report and pay after the year ends, non-residents must prepay based on gross income unless they elect under Section 216. It's strict but effective. It shifts tax collection responsibility to people inside Canada and reduces risk of non-payment. Section 216 requires a formal election. If you want to be taxed like a resident on net rental income, you must file an NR6 form early in the year. File a Section 216 return by June 30th. No automatic deductions. No second chances if you miss the deadline. That's how the CRA ensures non-residents are intentional about compliance. Foreign landlords are often misguided. The CRA has seen a pattern. Foreign landlords often assume Canadian tax doesn't apply because they live overseas. Others mistakenly believe their property manager is handling everything or that they only need to pay tax in their home country. These misconceptions lead to late or missing filings, underreported income, massive penalties. To counter this, the CRA emphasizes education, strict filing protocols, and financial penalties for non-compliance. International agreements raise expectations. Canada is part of numerous global agreements like the Common Reporting Standard, CRS, which increases transparency and data sharing between countries. That means non-residents can no longer fly under the radar. With digital records, Airbnb disclosures, and property registry access, the CRA knows who owns what and who's not reporting. If you require assistance with Canadian tax matters, our team is ready to provide reliable professional support. Please contact us at 416-283-8774 or visit theaccountingandtax.com for more information. And if you found this video helpful, don't forget to like, subscribe, and share.